If you're a US citizen or green card holder living overseas, one of the biggest tax decisions you may face is this. Should you use foreign earned income exclusion or the foreign tax credit? And here's the mistake. Many expats assume the foreign earned income exclusion is automatically the best option. But for some taxpayers, especially those living in higher tax countries, the foreign tax credit may produce a better long term result. US citizens and resident aliens are generally taxed by the United States on worldwide income, even when they live overseas. That does not always mean they pay tax twice, but it does mean they need to file correctly. The two common tools used to reduce double taxation are the Foreign Earned Income Exclusion, usually claimed on Form 2555, and the Foreign Tax Credit, usually claimed on Form 1116. The IRS says US citizens and resident aliens abroad are generally taxed on worldwide income, and Publication 54 covers the special tax rules for US citizens and resident aliens working or earning income abroad. First, the Foreign Earned Income Exclusion. This allows qualifying taxpayers to exclude a portion of their foreign earned income from U.S. taxable income. For 2025, the maximum exclusion is 130,000 US dollars. For 2026, the IRS announced the amount increases to 132,900 US dollars. But you do not get the exclusion just because you live overseas. You generally need foreign earned income, a foreign tax home, and you must meet either the bona fide residence test or the physical presence test. The Form 2555 instructions say taxpayers may qualify for the foreign earned income exclusion and foreign housing exclusion or deduction if they meet the tax home test and either the bona fide residence or physical presence test. Here's where many expats get caught. The Form 2555 is for foreign earned income. It does not simply wipe out every type of income. It generally does not cover investment income, bank interest, dividends, rental income, pensions, capital gains, or foreign company income just because you live overseas. And there's another planning issue. If you exclude income using the Form 2555, you generally cannot also use the same excluded income to generate a foreign tax credit. So, the exclusion can affect your credit calculation. Now, let's talk about the foreign tax credit. Instead of excluding income, the foreign tax credit allows you to claim a credit for certain foreign income taxes paid or accrued. In simple terms, if the same income is taxed by a foreign country and by the United States, the foreign tax credit may reduce your US tax so you are not taxed twice on the same income. Form 1116 is used by individuals, estates, or trusts to claim the foreign tax credit when they paid or accrued certain foreign taxes. And the Form 1116 is attached to either Form 1040, 1040 SR, 1040 NR, 1041, or 990-T. Let's use a simplified example. A US citizen living in Australia earned 100,000 US dollars of salary and pays 30,000 US dollars of Australian income tax. On the left side, using the Foreign Earned Income Exclusion, the salary may be excluded from US taxable income if the taxpayer qualifies. On the right side, using the foreign tax credit, the income remains on the US return, but qualifying Australian tax may be used to reduce US tax. In a higher tax country like Australia, the foreign tax credit can sometimes be more useful because the foreign tax paid may already be higher than the US tax on that same income. The foreign earned income exclusion may be useful when you live in a low tax or no tax country, when your foreign income is mostly wages or self-employment income, and when you qualify clearly under the physical presence or bona fide residence test. For example, if you are living in a country where little or no income tax is paid, the foreign tax credit may not help much because there may be little foreign tax available to credit. In that case, foreign earned income exclusion may be more valuable. The foreign tax credit may be better when you live in a high tax country, when you want to preserve eligibility for certain credits, when you have income above the foreign earned income exclusion limit, or when you want better long-term planning for foreign tax credit carryovers. For many US expats in Australia, the foreign tax credit deserves serious attention because Australian income tax is often higher than US federal income tax on similar salary income. The mistake is letting software choose without understanding the long-term effect. Sometimes the lowest tax result this year is not the best strategy for future years. Common expat mistakes. First, using the foreign earned income exclusion every year without comparing it to the foreign tax credit. Second, not tracking foreign tax paid or accrued correctly. Third, forgetting that excluding income can affect other parts of the return, including credit planning. Fourth, assuming foreign earned income exclusion covers investment income. It does not. And fifth, trying to fix years of non-filing without reviewing which method should be used for each year. Before choosing between foreign earned income exclusion and foreign tax credit, ask these questions. Number one, what type of income do you have? Salary, self-employment, pension, rental, investment, or business income? Number two, how much foreign income tax did you pay? Number three, are you in a high tax or low tax country? Number four, do you qualify under the physical presence test or bona fide residence test? And number five, do you have children, foreign accounts, superannuation, investments, or business entities that affect the broader return? The key point is this. Foreign earned income exclusion and foreign tax credit are not just two forms. They are two different strategies. If you are a US citizen or green card holder living overseas, especially in Australia or another high tax country, do not assume the exclusion is automatically best. Review both options before filing. And if your situations includes foreign accounts, superannuation, business ownership, investments, or prior year non-filing? Get professional advice from qualified tax professionals before you choose. Need help reviewing your U.S. expat filing position? We can help you. Book a clarity call with us. Email us at hello@usautax.com today.